Hi guys, I'm Pietro from tradingkitchen.com. Just a few seconds before watching the video, I just want to make sure you subscribe this channel, not only to keep you updated of all my free video contents, but also to contribute to the sharing of this and the others contents in a totally free way. So please subscribe the channel, drop me a like, but above all, I just want you to use the comment section below to let me know what do you think about this content and what you want to see more. Okay, thank you very much, and now let's go back to the video. Hi guys, my name is Pietro. Welcome to tradingkitchen.com. In this video I will speak about ICHIMOKU Cloud. Just a premise, I really don't believe in indicators for a simple reason. The data by which they are built, they are made, are based in the past. Okay. So there is no reason by which we can consider these data. Okay, there is no reason by which I can say these data could be valid in the future as well. Okay, in my strategy, I will not use indicators. I use some indicators like moving average as confirmations, okay, or as a triggers, but I really don't believe in indicators. Another reason is that it will be too easy, obviously. ICHIMOKU Cloud is the only indicator that can forecast the future. ICHIMOKU Cloud represents a trend following trading system. The advantage of this indicator is the fact that it offers a unique perspective of we can see just support and resistance, okay, because the levels, the data by which the ICHIMOKU Cloud are built are based on price action. Okay, so here we have the S&P chart. As all the indicators, the higher the time frame is, the more effective, the more profitable, the more valid, okay, the indicator signals are. Okay, so I consider the lower time frame I consider for macro analysis as 4-hour time frame. Okay, so we cannot consider ICHIMOKU Cloud, or better, we can consider ICHIMOKU Cloud also for intraday operation on the 15-minute time frame or the 5-minute time frame as well. But for huge analysis, it will be better to consider 4-hour time frame at least. Okay, so let's move to the chart, and what we see is this kind of group of indicators. Okay, well, I will not explain. I will not tell you the parameters of this indicator. I will use the standard one of TradingView. So you can do the same. It is very, very good like this, like it is built originally. Okay. Okay, so as you can see, we have 4 elements: the cloud, which is the grid one. We have 3 lines. Let me zoom, maybe you can see them. We have the red one. We have the green one. We have the red one, and we have the blue line. Okay, these are simply something quite similar to moving averages. Okay, they are moving averages, to be honest. So let's first consider the red one. Okay, they have it has his name. I really don't remember the name. Could be Tenka-san, something like that. Sorry for my Japanese probably pronunciation. Anyway, let's call it conversion line. Okay, as the red line is the faster line. Okay. So we can call it conversion line. I just think about it has another name, maybe turning line, something like that, but I really don't remember. Anyway, doesn't matter. Conversion line signals an area of minor support and resistance, just because it is faster. Okay, it also moves much faster than the other line, which is the baseline, the blue line, and reacts to trend quicker. Okay, to trend changes. I mean, to trend changes very, very, very quick. The blue line is the baseline. Okay, it moves much slower than the conversion line, obviously. The baseline is also known as a confirmation level and serves as a signal for support and resistance. Okay, I know that a lot of traders use the baseline just a stop loss. Okay, so put the stop loss few pips above or below the baseline. Okay, the third line, which I don't remember, I always forget the name. I mean the green line. Okay, this is just, we can call it ICHIMOKU line. Okay, it's just a mirror of the price, as you can see. Okay, just a mirror of 26 period above, I suppose. Okay, if I don't remember. So as you can see, if you see this move, the price is the same that this move. Okay, this movement. Okay, is the same, just 26 periods before. Okay, sorry, I will explain later the meaning of this line. Anyway, the last indicator we have is the cloud. Okay, which is I don't know if the most important, but it's very, very important, obviously. Okay, what's the meaning of the cloud? Easy. So first of all, if you see a very big cloud, it means that this zone is very, very important. Okay, the cloud is you have to treat it like support and dynamic support and resistance. Okay, as you can see, a lot of time the cloud stop the price. Okay, a lot of time the price reacts to the cloud. Okay, look at this. Okay, so the cloud, the longer the price stays above or below the cloud, the stronger the trend is. So this is the main meaning of the cloud. When the cloud is wide, like this, is huge, is big, is larger, this is meaning that the price, the trend is strong. Okay, so the resistance level is strong, meaning that the price break out massively. Okay, like in this case. Okay. When the cloud is thin, like here, okay, the support or resistance level is considered weak. Okay, so easy to break. Okay, so these are all the indicators that you have to consider for the ICHIMOKU cloud. Another thing that I didn't tell you about the cloud, what the standard rules of ICHIMOKU cloud theory says is that you have never to trade inside the cloud. Okay, just because trend is not clear. Okay, when price is inside the cloud or quite close to the cloud, is going to enter the cloud, it means that we are on a not clear environment. Okay, so you have to wait for the price to leave the cloud. Okay, so how to read ICHIMOKU cloud indicator? For many traders, this system could seem complicated and hard to understand, but as you understand the way to read all these indicators, and believe me, it will be very easy. Thanks to ICHIMOKU cloud, you will find lots of signals. Okay, it just works on all the markets, so don't believe about try to get the time frame slower to find a very good opportunity, because this group of indicator work on every market. Okay, so this system is based on a crossover, like moving average. Okay, and is a trend following signal. Okay, so first of all, basically, if price is above the cloud, okay, like in this case, you have never to consider a short. Okay, you have only to long. You have only to buy. Okay. Why I told you before a crossover system? Just because a lot of traders consider a valid entry when the cross line cross, and that's the reason for which it calls it is called a cross line. The cross line cross the baseline. Okay, so the red line cross the blue line. Let me underline so much better this one. Okay, so for example, in this case, okay, let me show you this. This is a very good signal. Why? Because first, the cross line get closer to the baseline to reach and cross. If you don't see here, from the high to the low, okay, from above to below, and then cross again from the low to the high. Okay, so this is a very good signal. Another good signal is that, as I told you before, price is above the cloud, and the ICHIMOKU line, which is the green line, okay, that here we are here, okay. If we trade here, means that the ICHIMOKU line is here, okay, and as you can see is above the price. So everything tell us that we are on a bullish environment, so we are looking for long operations. Okay, vice versa. Let me remove all the drawings. Vice versa, like this. In this case, price here first cross from low, from down to up, okay, cross in this verse, okay, the price, the baseline, then cross again the same baseline here, okay. So this is meaning that here we have a short operation, a short trade, okay, because price are below the cloud and ICHIMOKU cloud is in this case, so we are here below the price, okay. As you can see in this case, price just reject a little bit, go up a little bit, and then go finally down, okay. Let me remove another drawing another time, and let's see for other examples, like in this case, okay. So look at here, price is above the cloud, price in this case is above also the red and the blue line, and the green line here, okay, is above, so here is above the price, okay. So everything tells us to go long, okay. Now we have to wait for the signal, okay. Obviously, like all the indicators, you have not to use it alone, okay. You have to use it combined with other kind of triggers or indicators, price action, candlestick pattern, support and resistance, supply and demand zones, everything you want, okay. Fibonacci, but not alone, okay. Obviously, the more triggers, the more confirmations you have, the more profitable you will be. Obviously, the more indicators you use, the less opportunities you will have. Okay, but as probably you were told, we have to be snipers. Okay, so less operation, but so much more profitable. Okay, so we are here. Okay, so we have to wait a long signal. Obviously, we can go long here just when the price exit from the cloud, because everything is long. It's telling us that we have to buy, but a lot of time we are not here ready, okay, to go long here. Okay, so we have to wait. We have to look for another possibilities. Okay, in this case, as you can see, price then move down again. We are in the cloud again. As you can see, another very important indication is this one. Also, look at the direction of the cloud. It is bullish as well. Okay. Look at the direction of the price to this trend line is bullish as well. Okay, look also in the past, everything is bullish. So here, for example, we can wait for the price to exit the cloud and enter perfectly here long. Okay, why? Just because the price is, as I told you, on a bullish environment, try to broke this support level made by also the trend line, but first of all on the cloud. Okay, price has rejected from this level, so a bullish environment is confirmed. Now we have to wait only a valid entry. Okay, you don't want to risk, you're right, so use price action signal. Okay, this is a resistance, so wait for the price to break the resistance, retest, and you can go long. Here red is above the blue, price is above the cloud, green is above the price. Okay, if you see price rejected, just goes against us for a while, but then it goes up. Okay, just another few things I want to tell you. Let me sorry. Yeah, this, for example. As you can see here, price, we are on a bullish environment. Okay, why I tell you this? Just because price is above the cloud, so you can set just a very easy rule: don't go short if price is above the cloud. Simply. Okay, when price is above the cloud, just looking for another signal. Okay, most of the times given by Ichimoku itself. Okay, so this, as you can see, the red line, so the cross line, cross the blue line, which is the baseline from above. Okay, so make this kind of cross. Okay, in this case we can say that we have a bearish weak signal. Okay, and not strong, just because price is above the cloud. Same thing here, as you can see, price cross line, cross the baseline from below. Okay, this is considered a weak bullish signal, that in this case is not so weak, but as usual, usually this is considered a very weak signal, just because price is is below the cloud. Another very important thing that I want to tell you is just consider the direction of the two lines, in particular the blue line, because look at this. In this example, it will be very clear. When price is inside the cloud, when price is the blue line and the red line are both horizontal. Okay, this is a clear signal of a ranging market. Okay, so first of all, we don't have to open any position here, just because price here could go 50% here and 50% short, 50% long. Okay, trading is often a study of probabilities. Okay, but this is very good, just because this kind of signals tell us where structures areas are. Okay, in this case, for example, this could be a very good one. In fact, look at this. Price, after a ranging market confirmed by the horizontally of our lines, price broke the structure and then retest. On the retesting, we have the cross line below the baseline. We have both lines below the cloud, and we have price below the cloud, and we have Ichimoku line below the price. Okay, so here everything is bearish. This doesn't mean that we have to risk all our capital, obviously, but it will be so much profitable. Okay, so much easier to get a profit in this kind of situations. Okay, the last thing is correlating to this thing I just told you. It's about stop loss. Okay, so when you see lines, horizontal lines, okay, so a ranging market, you see the price inside the cloud. This is a lot of the times is a structure. Okay, And this structure is a very good area in which you can set your stop loss. So, for example, in this case, if this is an entry, I will set a stop loss just a few pips below the structure. So here, okay, and a TP according to your willing to risk, your risk to reward ratio. Okay, I usually use 2, 1, 2, so just here more or less. Okay. Okay, guys. So this was this is the easiest way to use ICHIMOKU Cloud. Obviously, if you follow my strategy, you will be able to identify the right triggers, okay, and to enter correctly the market, and above all, avoid all fake signals. I really hope you like this content. So drop a like just below here, but above all, I would like to use the comment section below to tell me what you think about this content and what you want to see on the next free video content. Okay, thank you guys. See you.